Welcome
Hi.
to our DM session of 2021. I'm Katiya Xiong, and I am super excited to see all of you here with me and our three financial advisors and Carol Hornet from the CDA. So I work at Secura Consultants. My mission is with that organization, and I head the technology, marketing, and HR there. I'd like to introduce you to Carol Hornet. She is a longtime friend of Secura Consultants, and she is president of the Council for Disability Awareness, the CDA, and she will be moderating today's panel discussion between three brilliant financial advisors in our industry, Kath Garrison, Lauren Haynes, and Sarah Carlson. Each of these ladies is the founder of her own organization, and together they make up a combined industry experience of 45 years.
Let me just start with this. Why would we do a focus panel on women in financial planning? So I will admit I decided to shorthand some of my research and went to one of my favorite people, Sally Krawcheck, who is known for many, many things, including a company called LVest, as well as the Elevate Network, which is really focused on women in financial planning. And one of my favorite quotes that she has is that financial advice is not gender neutral. Yet we still operate, at least in the US, in a situation where 99% of our investment management firms are owned by white men, and 86% of them are financial advisors are men as well. Now, that doesn't mean that either gender can't advise the other gender well, but what is specific about women and women's financial lives are different. We largely tend to be paid less than men. We're paid about 81.5% of what a man is paid, including right out of school when we get our first jobs. We largely stop getting raises a decade earlier than men do, and women's peak earning is at age 44 with an average salary of $66,700, while peak earnings for men happen at age 55 with an average salary of over $101,000. Women live longer, and therefore we actually need really good financial plans because we're going to need those retirement dollars longer as a result. We unfortunately do have more debt, and part of that is associated with the disparity in pay. So if we leave college or university with the same debt as a man, because we make less money than they do, at the 4-year mark post-college, men have paid off 7% more of their loans than women have. We do more unpaid labor, but largely within our homes and our family and friend relationships. And we also receive fewer promotions. So it seems like a dismal picture, but that doesn't mean that there aren't really positive things we can do. So I'm going to ask our panelists to also turn on their microphones. And let me get the conversation started with you guys. When you first meet with a client, I'd love you to tell us about the items you review, with particular attention paid to the income protection or insurance protection products that you discuss. And Lauren, why don't we have you start the conversation?
Sure, great. Thank you, Carol. So as part of our process with clients, we do review all insurance coverages, and that really varies depending on stage of life. So for everybody, it includes home, auto, liability, life, disability. Some clients have personal articles, policies, or other specialty policies that they may have. We also review clients' health insurance options, either provided at work or what they are accessing on through the ACA exchange or a private market. And then for business owners, we are reviewing the policies that they have through the business. So that could be general liability, cybersecurity, business overhead, whatever they have. We want to see it. We want to know what we're dealing with.
That's a really complete list. Sarah, when you hear that, do you have other things that you throw into the mix in your conversations?
Just similar to Lauren, we have a process of collecting data, and insurance is such an important foundation for a financial plan of building security. So in addition to the insurances, we have many clients that will self-insure for the small stuff. So insurance, in my opinion, should really be for the big stuff, the things that would alter your financial trajectory. For the small stuff, an emergency fund and self-insuring can many times be more opportunistic.
That's a great summary. And Kath, I know in my own situation, I actually sought financial planning pretty early in my career, and I'm glad I did. And at that time, the only thing they asked me about was long-term care coverage, which they were sort of shocked that I'd already had. So I already understand I'm a little bit unusual. But as you hear this conversation about income protection, and the audience is about to find out that you have worked both in the UK and the US, how do you hierarchy talking about income protect or insurance products, including income protection?
So the conversation changed quite a lot when I moved to the US because I was a financial planner in the UK, and there are a lot of different benefits provided by the government, a lot of different subsidies that you can obtain over there that just aren't here in the US. You know, health insurance isn't something that most people in the UK would think about. So when it comes to things like disability, that was something that was a bit more prevalent in the UK. So my conversation here was really more about, what do you get from your employer to start with? Let's have a look at what you already have, and then we can build out your knowledge base before we even go into what these things mean. I think there's often a lot, and I don't know if Lauren and Sarah agree with this, but there's a lot of misunderstanding when your employer provides you with policies. Not a lot of people really take the time to understand what they are, and especially things like short-term disability over here. My husband wouldn't even be able to probably tell you exactly what his policy states. You know, he'd probably ask me to tell him what exactly that looked like.
You know, I actually think you're spot on, and it is good to note the differences. I've had the privilege of having a lot of conversations with our colleagues in the UK through the Income Protection Task Force, and we've educated each other about our strengths. The US does have some strengths in some ways about coverage, and we have a higher preponderance of group coverage available in income protection. So let's talk about it. I think the thing that's really confusing for consumers, obviously particularly working adults in the US, is their ability to sort of walk through this hierarchy of coverages. And it's interesting because we're just finishing up a 2-month campaign at the Council for Disability Awareness, this time with a focus on talking about income protection from the lens of family, no matter how people define it. So covering all kinds of family structures, including being single, frankly, and having friends as part of your family. And as we have put out, like, actually well over a dozen blog posts that are very educational, we found that the number one thing people were aware of, consumers were aware of, was, of all things, Social Security disability insurance, which is in many ways the least lucrative and the hardest to get of all the coverages. So that is certainly one. But in the employer space, in the group space, and we know we have employers on this call, there's short-term disability. We've seen the coverage morph a little bit. We now see, instead of 6-month coverage, many more employers are choosing 3 months of short-term disability. We see long-term disability, and of course, then the same morphing has happened. We see a migration toward a 3-month elimination period or waiting period for benefits, which is down from 6 months. And then we do have an individual-like product for high wage earners for companies that choose to offer that, which is GSI, guaranteed standard issue. And then certainly we have individual disability coverage. And then, as you've referenced, Kath, you know, in the entrepreneurial settings, in the small business settings, we see key person coverage. We see things like business overhead expense. And now we've recently seen, I believe it is 3 individual carriers come out with a spousal disability product. So as the 3 of you think through that, and this time, Sarah, I'm going to start with you. Do you have a hierarchy as to how you discuss all of these various coverages and work your way through even finding out if your client has them?
I definitely, disability income is one of those coverages that I think everyone who has an income and needs their income to pay their bills should have. So to Kath's point, so many people don't understand what their employers offer. So those building blocks of education to help them understand what they have and then build on top of it. But truly, it's more important than so many other types of insurance policies that may be more expensive, but if you need your income, you need disability, and then getting a plan that makes sense in your budget and the coverage that you need right now.
That's a great point. And Kath, I'm going to turn to you and say, I'm a big fan, by the way, of group coverage. It is less dominant than people realize. About 40%, according to the Bureau of Labor Statistics, of employers in the US offer short-term disability coverage, and about a third offer long-term disability coverage. So we still aren't even at 50% of people who have that kind of coverage available to them. And then if they access it, of course, and they don't pay any of the premium, it's completely taxable. How do you work through this conversation with people, including the fact as we more rapidly change jobs that these coverages aren't portable?
Yeah, and I think that's a really key point, is the portability just isn't there of some of these insurances. One thing I know that employers kind of do the life insurance, like almost everybody I know who works for an employer has life insurance. Well, that they know that's great in a way, and that will help in that catastrophic event. But if we look at how much income you would generate over 10 years at your salary, oftentimes that far exceeds any kind of life insurance. So I think kind of really getting the client to understand how much they're insuring. Really, they're not insuring their income, they're insuring them, they're insuring their life, they're insuring the rest of their life potentially in some kind of shape, way, or form. That's the kind of key part, I think, to get across to them is what it's paying for. It's not paying just a few bills here and there, it's paying to sustain you. And in compared to life insurance, some of these employers will put life insurance in place for their employees, but not really understand that benefit of why you would need the income protection instead, because protecting your income is, as we've kind of all said, is really key and important. If you don't have the income, then you can't pay for other things, really anything. It's not like you kind of have a magic tree that provides you with money every day. It'd be great if we did, but realistically, we are our biggest asset. And I always say that to my clients is, you are your biggest financial asset. You're the one who earns that income. Without that income, you don't have any savings accounts, you don't have any investments or retirement accounts. So it's a really key kind of point to, I guess, drill home, is the importance of that over things like life insurance that I guess people not take for granted, but they just kind of assume that you need life insurance, which you kind of do. But you do need the income protection as a primary kind of focus, really. That to me is more important in the hierarchy.
Well, and that's exactly where I was going to go, is the hierarchy question, because as we all know, you're more likely, unfortunately, to have at least a period of temporary disability. In many cases, can be as simple as having a baby, to as complicated, which, just so the audience knows, Kath has just had, so congratulations.
Thank you.
But as complicated as certainly traumatic injuries, although we know they play a much smaller part in disability. A lot of this, as Kat put up through the intro video, is things like cancer, and depending on the country you're in, if you're in the UK, you've got a basically 50% chance that you will have a cancer diagnosis in your lifetime. And in the US, we've morphed a little bit, and we're about a third as likely to do that. And so life insurance, absolutely important. But Lauren, as you think through the hierarchy question, because I think of everybody I've talked with, you ask the broadest coverage questions around insurance products. How do you have that hierarchy conversation?
So in our planning process, we actually have a meeting that's about insurance. So we kind of try to chunk things up over the course of a year, so it's not tremendously overwhelming for people. So in terms of hierarchy, I'm generally looking at actually like home auto liability, because I think, a car accident is probably the most likely thing to happen. So car, home liability, life, and then disability is also in that same kind of primary importance. Then, the business insurance is a little bit like, a lot of times we need to wrap our arms around what's going on in the personal side first. So we start there, and then the business insurance is usually a separate conversation.
That's great. Where does long-term care sit for you in the conversation?
Many of my clients are a little bit on the early edge for long-term care. So I have some, because I tend to work with clients who are really high income earners in their 30s, 40s, like maybe very early 50s. So when we're in our early 50s, we're definitely talking about long-term care and how does that work? I include a long-term care expense in all of my financial plans. It's not a catastrophic expense, but we can model that. So I have some, and then we talk about it. Like, what is your family history? You know, does longevity run in your genes? What did that look like for them? And then so with long-term care, it's a lot of education, because people don't know a lot about long-term care. The market has been in turmoil around long-term care. So it's important, but I would say from my clients, it doesn't come up as often as it might for somebody who works with people who are like true pre-retirees.
Yeah, that's a great summary. And I am not here to give financial advice, but I can tell you, when I worked on the carrier side, we were in and out of the long-term care business twice. And I knew the lead actuary very well. And his general recommendation to me, as someone who is a good saver and a good planner, is he said, Carol, around age 50, from an actuarial perspective, is a great time to really strongly look at a long-term care product. So I think that's pretty consistent with what the actuaries would tell you. So now, as we're thinking through this, and Kath, I'm going to start with you this time. When you are meeting with your client and you find that they don't have income protection products, maybe they don't have any, they don't have it from their employer, they don't have it on their own, or maybe they only have it on the employer side. How do you start to begin a conversation around the importance of that kind of coverage?
The first thing we always do in our planning, and I don't know if Lauren and Sarah are the same, but we do a budget. We do an expense, summary. If we don't know what they have going out, we don't know what their kind of disposable income is that we can allocate towards these insurance products, but we also don't know what their coverage needs to be. And I always say needs to be versus what they want it to be. I find a lot of people say like, oh, if I need insurance protection, I need my salary. But do they actually spend all their salary? Do they save half of it? What does that really look like? And I think sometimes when the cost can kind of be a difficult discussion, having that balance, that budget, and kind of going through the balances for each section is really useful, because you can do the whole needs and wants through every section, and the sections that are the needs are the ones that really truly need to be covered. So you can kind of manipulate the cost a little bit for them to make it a little bit more feasible. So the budget for me would be, I guess, the key element when we start this conversation. And then when they start to talk about the things that they need and they cannot possibly live without, that's when it's quite an easy kind of just transition into what would happen if you didn't have any income to cover this. What would you do if you're telling me that you need this? How would that look?
Yeah, I think that's a great way to start a conversation, right? Because it is about budget first. If you don't have the dollars for the coverage, it's hard to get to the coverage. So Sarah, I'm going to come to you and let's talk about that a little bit. Like, one of the things we sometimes hear, particularly on the individual side, at least in the US, is that this is an expensive coverage. And you'll also see a number of carriers essentially have, even though it is somewhat artificial, a threshold for even when they'll insure somebody for income protection. So Sarah, tell us about how you start to talk about modifying an individual disability plan for someone.
One of the things that I think is important for the individual to understand is, for every $1 million you have in the bank, you can generate easily probably about $30,000 to $40,000 in income. And so many times a person that's making $100,000, they don't realize that income is worth about $3 million in the bank. And so as people accumulate wealth, and I've been in this industry over 30 years, so I have clients that are retired and those that are just starting to save. But there is an opportunity to self-insure in part of that. If they get to a point where they have their retirement pretty much intact, that can be an opportunity to back off on disability. And then many times long-term care ends up being the next need of replacement dollars. But in terms of the coverage itself, the contractual provisions are so important, and making sure clients understand the opportunities and limitations, and many times there's price associated with it. So mental health is definitely one area of coverage, whether or not it's integrated with social insurance, whether it's more of a catastrophic contractual provision or one that covers for replacement. So helping make recommendations for a solution that is appropriate and attainable and that they can maintain. That's certainly really important.
Thank you. Those are great points. And so, Lauren, I'm going to come to you because one of the ways, there's a variety of ways that Sarah's already started to outline that you can modify the plan design of an individual policy. In my life, I was fortunate that I have a good chunk of the beginning of my, if I have disability, self-insured. And that affected my plan design. It allowed me to keep things like unlimited mental health, no Social Security disability income offset. But there is also an opportunity to modify by doing a closed period of time, a 5-year policy. So Lauren, how do you walk through modifying some of the plan design?
Sure. So, I mean, for us, we have some things that we consider to be non-negotiable. So like having an inflation rider on there for a young person, it's our opinion that we have to have that. So, and then there are other things that are a little bit more personal preference. So how much, to your point, Carol, how much can you self-insure for? Do you have assets saved already? Do you already have, do you have a cash cushion that could absorb it? What is your lifestyle expenses? Some people are relatively modest expenses. Some people have less modest expenses. So we're negotiating that, like, what could you really, like, to Kat's point, what could you really live on, being clear on that. So, but for us, it's also looking at, how long do we make the waiting period? And then do we look at extending the period to 65? Do we extend it to 67? Or do we do a limited term coverage, 2 years, 5 years? And I think 2 years would be really way too short. But, for example, a lot of my clients, their Social Security full retirement age currently is 67. So, just having the conversation, like, well, if we go to 65 or we go to 60, there is still a pretty significant gap between then and when Social Security starts. And you may not have much of a benefit if you have an issue early on in your life. So for us, talking about how long to extend benefits is something that can be explored with people who, if the cost is an issue or they're a little bit more reticent about going down that path, is something to explore.
Yeah, I think that's a really fair point. And one of the things, based on some of our discussions before this panel, I went into our stats from the Council for Disability Awareness, and our most cited statistic anywhere is the average duration of a long-term disability claim and an individual disability claim. And the average is 34.6 months still around long-term disability, and a little longer on individual. It's about 43.3 months. But here's what's important. Averages are averages, right? That's what we all know. I was a math minor. I understand that. And what is important probably for people to consider is 45% of claims close before the first year is up. And then between 1 and 5 years, an additional third, 33% of claims will close. So we really only see 10% of closed claims are still open, or claims are still open at the 10-year mark. So there is an emphasis that this in many ways is not catastrophic insurance. This is insurance for gap periods of time. And as we think about the pandemic, and one of the things we're watching with women, I actually didn't think to ask this question as I was thinking through this webinar, is that women have taken an unusual stance in this pandemic, and they've gone part-time, they've cut back, they've downsized their jobs, they've left completely. Kath, as you think through that, particularly as a new mother, what advice would you give to women specifically on how to think through this topic?
I mean, I think that's definitely something, as you can see, I've just brought the little one to join us because he's woken up.
That's great.
It's definitely something I've seen around my peer group, and obviously going through pregnancy during the pandemic, seeing the number of mothers who have really struggled with maintaining schooling for their children, maintaining even a home life for running around after different classes and trying to homeschool while hold down a job. It's just not been physically possible. And I think that just kind of plays as well into what we discussed, but kind of at the beginning really, is that women are paid less because they do have more time out of the workforce. We are taking more kind of time off. For myself, my actual company didn't start until May last year. So again, I kind of started in the self-employment kind of own company realm last year after being corporate pretty much all my life, all my work life anyway. But just even thinking about how then I structured my own benefits, how would I even go about that? But it wasn't even the priority at that point in time. So again, with women, I think it's very key for us to really kind of consider that we're trying to manage about 50 other things potentially. Not saying that men aren't. Again, there's something. My husband's great. He's a fantastic partner in all of this. But I think sometimes we kind of fail to see that. For me, for instance, my will hasn't been updated in quite some time, and that's something that I need to get done. But we're 9 weeks in with this little one, and it's probably at the end of my pile to get done. So really kind of understanding and acknowledging the restrictions women have when it comes to priorities and getting these things put in place, I think is something we need to definitely take into consideration.
But there is a financial toxicity that can happen with disability. And I'm going to quickly tell my own story because disability can happen to anyone. The evening before, I was supposed to give the keynote address at an individual carrier's private symposium for their brokers and agents. I was in the crosswalk at a green light and I was hit by a car. So to Lauren's point, people do get in car accidents. I was actually hit twice and miraculously didn't break anything. I certainly had significant foot and ankle and hand and wrist injuries. The biggest worry though was my brain. I had a concussion, which went unrecognized, a story for another day about the difference in care women can receive in healthcare, particularly in an emergent situation. And when I finally got home, because I was 3,000 miles from home and was allowed to travel, the biggest concern was I was having word flipping issues. And I make my living with my brain and speaking and writing. And so a lawyer that I cycle with insisted that I go speak with an attorney. But I also met with my financial planner. And I said, okay, let's be realistic. Let's walk through the scenarios. Let's say I'm only out for a little period of time, a close period of time. Let's say I'm out for a year, and let's say I'm out forever. And when we looked at my savings, and then my two key vehicles, long-term care, and I was fortunate to have an array of disability insurance coverage. I actually have two individual policies and then a voluntary product. I no longer had a group policy, but I was well covered. My retirement plan didn't have to change at all, which was a wonderful outcome. Now, we do have someone else on the panel who's been struck by a car, also in a very similar setup situation. So Sarah, if you don't mind, I'd love to take the next five minutes and have you highlight the story of your experience, and particularly as you reflect on this topic today.
Yeah, so I too, like Carol, was on at the time working for an insurance agent, a statutory employee at a due diligence meeting in New York City. I live in Washington State. And during a scheduled break, I had joined my sister for lunch, and walking back from lunch, waiting to cross the street. It was a very quiet, had no anticipation, waited for that light to change, walked across. And it wasn't until I realized the car was on me. An SUV came at me straight on, hit me in the side. I immediately went up in the air. I lost part of my leg, was ripped off. It was a hit and run. Turns out it was a gangbanger that went on to commit 15 felonies that day. Myself and my niece being the hardest hit. My pelvis was in over 40 pieces. My joints were greatly damaged. But my biggest concern was I'm the mother of two sets of twins. And at that time, they were all under the age of 5. And my youngest twins, the week before, had just turned 2. So I was the breadwinner, and suddenly I became the special needs person. So I lived through all of the suddenly going from being able to provide for my family to not being able to do anything. And not only that, but had done everything planning correctly with a beefed up an emergency fund that went through so fast. I had group disability, I had individual disability. For the next 3 years, I was totally disabled. I went through 12 different surgeries. I was told I would never walk again. I used my kids as motivation to defy what I was being told. And I just felt like, in a way, I felt it was a blessing, because I knew I would be in a position to show my children what it's like to live with such a catastrophic accident. And I'm proud to say the biggest motivator was walking my kids to kindergarten by myself on crutches. And then that was followed by a recovery. And since then, I've done a few Ironman, and I'm an active athlete. And I am so thankful, through the grace of God and some amazing surgeons, that I'm able to do what I am able to do. And it was my disability policies and the individual disability that ended up paying. My group disability was integrated with all social insurance, and New York State had a pool of money for victims of violence. And so those benefits were actually held up for about a year and a half. My individual disability paid exactly the way it was supposed to. And then it was my group that required that I apply for Social Security. And I was actually surprised. It was very fast. I was approved for Social Security disability. And I was also surprised at the benefits I received for my children on that coverage. So it was about 3 years of being totally disabled, and my uninsured motorists paid out in full eventually. And the person who hurt me went away to jail, went to prison, but had zero assets to help compensate myself. So disability helped me keep my house, helped me not go bankrupt. And as a result, I've put 4 kids through college. I have a thriving business, and I'm glad I didn't have to make some tough decisions as I was trying to mend during that time.
Thank you so much for sharing that. We're getting some some comments, by the way, about your story. So it did resonate with people. Stories always do, right? I had one person actually, Monica Dwyer, has made a comment to the panelists. And it's an interesting one that, if you don't mind, because we have just a couple of minutes, I'd love to close with. And I think it's an element of how we talk with working adults about income protection. And she said, so if it's Monica Dwyer, if I didn't mention it, I think that the reason people plan for life insurance is fear. And she emphasizes fear. They are motivated by fear to plan for that. And they fear death more than disability. I'm going to make my own comment first and then turn it over to any of you that would like to take this topic, which is we've found through the Council for Disability Awareness that the fearful statistics that we often used early on about disability do not work in convincing large groups of people to shift their attitude. Personal stories like Sarah's work much better. It gives them something, still a scary story, but it gives somebody a face and an idea and an understanding of how that works. And frankly, personal stories from people that people either know or believe they know are influential. And what I mean by believe they know are celebrities. And one of the best ways we've seen that is celebrities being much more actively open about mental health histories. And that has actually formed a positive shift. As you hear this and you think about this concept of fear, what is your response? Is it of an effective tool, or do you use other tools when talking with people?
I think a lot of reason why people, fear is a big motivator. And yeah, there is, statistically, disability, you have such a great chance of being disabled longer than than 6 months. So if fear is a motivator that helps to get someone over that decision point, I think it's reasonable to point out what opportunities are to solve that.
Lauren, do you have any closing comments on this topic before we turn it back over to Kat?
No, I just think that, to the point that I think that Monica was making is that it's easy to say that you know someone who's died, but it might be harder to think of someone who's experienced a disability that's really impacted, even though they're everywhere, right?
Right.
But it's just not, so I think there's, to Monica's point, that's right. People really fear death, but we also have a Superman complex. Sometimes we think, oh, that won't happen to me.
Yes, I have even been in a room full of disability income experts and used the statistic 2 out of 3 of us, will experience a disability between 25 and 40. That'll put us out for work for 3 months. And everyone assumes that the other one in the room is the person that will happen to. So it's just the nature of the beast. So at this point, I just want to say thank you to all of you, Lauren Haynes and Sarah Carlson and Kath Darrison, for this great conversation. And thank you to the audience, and particularly a shout out to Joni Timpson and Monica Dwyer and Armando Paz, who've been sending us some comments. And Kath, we're going to turn it over to you.
Well, thank you so much to all of you, Sarah, Lauren, Kath, and Carol, for helping Secura Consultants put together this awesome presentation. I truly think that disability insurance is discussed, but just not enough across families, whether in the USA or in the UK. I myself, didn't take it that serious until my own sister-in-law last year, just prior to COVID breaking out, was diagnosed with stage 5 cancer. And so she was one of the 4 that I know who has been just struck with a disability. And without me acting as her financial advisor, even if I'm not certified, I don't think she would have been okay. So thank you so much for speaking, on your perspective about the importance of disability insurance, and just providing this education to the different mix of people that we have on here: employers, entrepreneurs, HR executives, and your peers, financial advisors. So with that, I bid everybody farewell and have an awesome day and be safe.